Get this rocket. So today we'll cover a little bit of currency strength. We'll look at some technicals and we'll look at some correlations. Um, those three things are going to allow you guys to get an entry, and they're going to allow you to find what I like to call an optimum pairing. So an optimum pairing is going to be where you'll be in the market at a place of potential consolidation, a potential rollover, or potential continuation. So we're going to be looking at a couple of things where we can identify high probability areas in the market we want to attack. For instance, we have IDUSD here now. You guys can see we getting pulled up. You guys can see we keep on touching this same area and we're getting a lot of wicks. The wicks are going to tell us a story. Same thing here. The day just started. We are coming off an impulse, but once we get to this level here, it's starting to kind of wick. So now I'm going to be looking for a reason to enter this trade. I got to have something solidified that's going to let me know. I mean, we pretty much look at that long wick. We got about 15 minutes in this hour candle. Look at the 15 is kind of retracing, but we got a nice. Somebody tap in the chat right now. What candlestick pattern this is? Let me see who's been studying. Got nice big candle up. What is this red candle going to be? Somebody throw that out in the chat. We move on. You see, there's a bullish trend, no lie. But what does this one candle represent? This big, nice red candle. We got a bullish trend. But this candle is signifying something. It's giving us an example of something.
I forgot the technical name for it, but that's letting you know the trend finna change.
Yes, sir. We got engulfing.
Engulfing, that's what it's called.
We got a nice engulf. That's a sign that this market could get ready to flip over. My boy Winter showed us the trend line. So the safest entry is going to be for us to wait for the trend line to break. And then we're going to wait for that pullback. Right here, we're going to want to take the trade to the downside. So I'm going to keep this kind of, we're going to start off base level because we got different levels of traders with it. We all have been there. So these are some of the keys to when you first start off, you want to kind of look for as far as entry. Entry techniques are things you want to enter. Excuse me, get called. So we're going to stay patient. We're going to wait on our hands. We're going to sit on our hands. But we want to see the market break this area, come back, and we'll be looking for an entry right around here. Now, this is called a conservative entry. This is conservative. You're waiting for it to pull back. You're getting more confirmations. We're going to build upon this. So let me pull up something real quick. Okay, this is I always have this up, my trading plan. How do I get in? How do I risk? How do I get out? Three main things with trading. We're going to pull up and we're going to start a rule base, man. We're going to get a little structure going. Okay, so one. So we identify trend on smaller time frame. We found an entry point. Now we're going to stay patient. Let me do something. I got my whole screen, so excuse me. All right, so we identified a trend on the smaller time frame. Well, actually, we started on the higher time frame. So we found an area where we kind of want to trade it. We see that there's potential resistance ahead. So we jump down and we kind of just going through the time frame to see what's going. We see that there's a nice wick. Put that on there too. First we see potential resistance. Down the time frame. So this is just your homework before you jump in the trade. So for some of my more advanced traders, don't worry. I got you covered. We're gonna get in depth. But we want to start out with it ain't nothing wrong with the fundamentals. So I do see a wick right at the zone. Now I'm like, hey, that could be a reversal, even though this trend's up. So now I'm getting into where I want to kind of enter. I see this nice wick. We do got a big candle here, but it hasn't pushed above this wick. Now we're starting to get a drop down. We want to see this break and this retest. Now that's conservative, what we call conservative entry. Conservative. Now, if I want to be aggressive, I already have the engulfing. I have the pullback. Here's my entry already, saying that it's going to pull. Aggressive, it's going to give me a tighter stop loss. So I want to cut this trade if it goes against me. I don't want to sit around and give it too much time to see what it's going to do. This will be my aggressive spot. So right here, I can take the trade. I'm not saying here everybody take this trade. You can wait for more confirmation. I'm at a supply zone. So I'm going to put just a small lot to see what it does. So I entered this trade, stop loss above the high. It's on about a 13-pip stop. Now when it breaks, it comes back, I can give me another entry. Be my second entry. If it's going to pull down. Stop's still going to be in the zone up there. You also have a round number. Those round numbers are significant because when we look in the past, every time we get to this round number, 700, that holds up as resistance. Round numbers are significant for psychological levels. We can also see that this broke a supply zone, came back to retest it.
Well,
banana.
Hey, can you check the chat?
Okay.
Yeah, I got you. All right, let me. I'm gonna switch this headset. Then give me 1 second. Okay, how is that? Is that any louder?
Yeah, that's much better.
Okay, indeed. So I know I gotta go get a refund now on this mic I just purchased. All right, we're gonna run it from the top real quick. So I came into this trade. I've been seeing a lot of bullish impulse on AUD USD. The price came from a supply level, came back down, came back up. When I'm looking at this level, I see these wicks. So price comes up to this 7,000 level, which is going to be psychological. All the round numbers are. So if you guys like back test and you start seeing that round numbers, they make decisions. The banks and hedge funds makes decisions here. So I'm kind of trying to play that same scope. If in the past it's resisting, I want to be looking for sales. My bias from a long-term scope or from a higher time frame, you always work top down. So I'm seeing, the potential for it to flip over. Earlier, my boy Winton has showed us that we were looking at like a 15-minute chart. He was showing, well, hey, this shows a trend up. But we did see this candlestick pattern. Roger identified it as an engulfing, which is usually a sell sign. So I'm showing two ways that we can play this. We can be conservative, wait for the price to break, come back, retest, and we're going to be looking for an entry here. Or we can play this aggressive, because I already have an alert candlestick that's telling me this candle engulfed all this previous candle. So I could, now that it pulled back a little bit, you always want price to come to you, I can take the sell. Aggressive will give me a tighter stop loss. Conservative, I'm waiting, but there's a little bit more range before I know that I'm wrong above this 7,000 level. If it breaks here, retest is going to probably shoot up. So when you come in a trade, trading is more of an art form than science. So you kind of got to stand on your tippy toes. You got to prepare for different situations. So the market could come down, retest, give me a nice entry. If I get a wick around here, I'm going to sell it. Now, what if the price on the opposite end, you want to plan for each thing, for each scenario with your trades? The market doesn't have to go break down, come back up, and then automatically fall. So I want a reason when it gets here to sell, or I want a reason to buy. If this comes up and it shoots up heavy, and I'm like, hey, it doesn't look like it's going to sell, why would I want to be a seller? I'm going to wait for the price to come back to me, drop, and I'm going to buy. So you're mapping out both sides of your trade. I had a couple of different things we did. We identified a potential resistance point. We went down the time frame, and we noticed on the hour there was a big, nice wick that didn't fill. We identified the trend on a smaller time frame. We also found an entry point with the engulfing. Now we're just staying patient. Unless you want to play the trade aggressive, you guys may have seen me go ahead and throw in an entry, kind of like maybe a pipper. Well, no, I'm just at break even. So I play just aggressive. You have aggressive and conservative entries. So this is technical. These are kind of some of the fundamentals of your trading. So I want to have multiple confirmations is what we call it, or multiple things in my checklist. So for me, I'm going to look through. That's why it's important for you guys to have a trading plan. I'll give you a copy of mine, and you can customize this however you want. But I use support and resistance, check mark. I search for supply and demand. We're at a supply zone. That red box represents supply zone. That's another check. So I have about 5 reasons here, 5 or 6 reasons where I will enter the trade. I need to have at least 3 of these check marks for it to be, the more the better, but at least 3 for them to be a trade that I would want to take. So now I'm just going to look for more check marks. Bollinger Band. It's on the outside of the Bollinger Band, pulling down. That's another check mark. Higher time frame. Top of the Bollinger Band. That's another check mark. This trade is looking more and more probable. If I want to be safe, once again, I'm just waiting for it to pull down and pull up. So this first portion of the call was just some basic technicals. You guys will get familiar with this, how the trade moves, how to each particular pair. But now we're going to break it down, and we're going to go into something a little bit more detailed. This next step is going to be called currency strength. Now, before I do that, we're going to also, we can let's look at some indicators. I'd like to get you guys away from indicators, but we can start off the same thing, top down. Stochastics is not, I like to see it at 90 before I consider it overbought, but it's kind of high. We're starting to see a little turn down. Well, that's on the hour. We want to start on like the daily. Daily is pretty high, over 80. Looking forward to start turning over, turning down. We'll check each time frame. 4 hour, it's kind of been up. 4 hours kind of going up. So that's a cross
reference of the indicator. So, you know, you'll notice that with different time frames, it's going to give you different results. The hour, it's been kind of almost overbought, tipping down. 30 minutes, my favorite time frame. Look, what do we have? It's starting to bend over and show us what it's working with. It's kind of bending down so we can get ready to enter our position. 15 coming down. So off of stochastics formation, this is getting ready to be a nice sell. So now we want to jump into what we call currency strength. And I want to show you guys an example. This is another chart that I use for my, we can zoom in here. Big thing in your trading is you're gonna have to take down your data. You wanna know what trades you're taking, why you took them, kind of keep track, and then on the weekends you can see what was right, what was wrong. This is my trade journal. I'll mark it down where I got in, what's my risk to reward. I'm keeping track instead of just trading. I call it firing from the hip, taking trades and just taking trades, because mentally, this is like a marathon. You get to the point to where you got, 10 trades and you start forgetting, why did you even enter this trade? So when a trade goes against you, mentally, you're ready to exit the trade. Are you jumping out too early? These things keep you on track to know, okay, I want to take my profit at 109, or I want to take my profit at 0.84. We're still at 9.0. Why am I trying to hurry up and get out this trade? You're going to go back and think, did I over leverage? Why am I psychologically trying to rush this trade and not let it pay me the risk to reward I was looking for? So now we're jumping into currency strength. If you guys see this diagram, we're going to be looking at a base currency and a quote currency. The base currency is always on the left, the primary. The secondary, what it's paired against, is going to be in the right. So we take AUD USD. If the price is stable, or they're similar in strength or weakness, it's going to be like a seesaw. It's going to be like a tier, like it's going to be same level. Neither one is stronger, neither one is weaker. When you see things like this, you're going to be seeing choppiness in the market. You'll see a consolidation. See if I can find y'all an example. So around this area here, this consolidation, AUD and USD were about the same strength, so it wasn't moving anywhere, it was just bouncing. That's my diagram. So when price rises, you have AUD is going to be stronger. USD was weak at that time, causing the price to rise. The opposite, if AUD goes weak, USD goes strong, it's going to cause AUD USD to drop, which is what we're in wait for now. Now you might say that's fine and dandy, but what does that do for my trading? What that is going to do is going to allow you to work into what we call correlations. So if I see that there's a potential for AUD, now we're not trading like retail traders. We're trading like more professional traders, and we're trading like in a futures market. This is going to allow you to move through the board without having to do chart work on every single pair. So now if I'm seeing, like, I think AUD may go weak. Now I want to tell how weak will AUD be compared against other pairs. So I'm going to go from AUD, okay, potential weakness in AUD. Let's look at AUD JPY. If you notice, they're making the same exact, pretty much same exact moves. It's a little difference. This lets me know that JPY is even weaker than USD because it's still kind of going up. USD is kind of more pulling down. So now I can have a list of what's strong and what's weak. I got AUD is stronger than USD and JPY, but I know USD is weaker than JPY. So what that'll tell me is that if I look at USD JPY, USD JPY with USD being weaker. Let's hold on, I got it backwards. That's why it's going on. So, or no, I had it right. Excuse me. USD is stronger than JPY right now. Because if we go back and we look at the chart, we see AUD. So let's look at our diagram so we can stay on there. So we have AUD. It's going to be strong. USD was weak. So the price was going up. But if we look at AUD JPY, same thing. AUD stronger, JPY weaker. But when we look at, we see this big red candle. That lets me know that USD got strong for a second. So if I compare AU and UJ, or excuse me, AU and AJ, would you say that AJ moved higher than AU? AU came up and dropped down. But if we look at AJ, it just kept going up. So that in itself tells me that JPY is weaker than USD. So now I have these three pairs, so I compare it together, USD and JPY. And since USD is stronger, should be stronger than JPY, let's look at what UJ did. Now we're working through the charts without having to spend all day looking at different charts. Starting to get the drop on UJ. So there was a poke. Or excuse me, we should have had this big, nice candle. AUD USD was, or excuse me, when I looked at AUD USD, USD got some strength. So that should be right. And I'm showing you guys this manually, but I'm gonna pull up an indicator here that'll make it do 360 or come in full circle. So we see that we had AUD going up in a bullish trend. All of a sudden, we got a nice engulf. When I split the pairs, I'm not looking at them as pairs. I'm looking at it as single currencies. At this point, it tells me that USD got stronger. So that correlates with USD JPY. See that candle? USD got stronger than JPY.
What are you doing?
So based off of one pair, we're able to make decisions throughout the whole board. So now I'm gonna show y'all a shortcut as we see some of the things you can start doing and making decisions off of currency strength. These are called CSI, or currency strength indicators. Anybody can download these or add them to your charts. We'll let them pull up. And as far as knowing which pairs to, let me mute everybody out. As far as knowing what pairs to match, you're gonna have to start learning about your correlations, the pairs that run together. Give me a second, let me pull up something. I'm gonna drop this in the chat, and y'all can also, I also put it in a group. Right here, I can find it. Let me see, I got it. Okay, this website, mataf.net, you'll be able to pull up all your correlations and see which pairs run together. I also put in some information in the chat before. So to break it down, this is going to keep you in sync. But ADI, NZD, Euro, those are going to be, or excuse me, ADI, NZD, CAD, basically Euro. Those are all considered what we call commodity or high yielding currency, and NZD goes up. That means that investors are optimistic in the market. They're looking for opportunity. They're trying to let their money work. When they get leery or they get nervous, they go over to what we call safe haven currencies, which are going to be like USD, JPY, sometimes gold. So what happens is you're starting to learn how to follow money flow. So if I see ADI, USD, or excuse me, so if I see ADI, NZD going on a tangent to the upside, I typically you're going to see the stock market do the same thing. You see stock market rising. I always tell everybody the stock market and the dollar pair controls the whole board. So if you learn how to work those two pairs or those two currencies, not in pairs, but as currencies, you start noticing what's going on as far as investor sentiment and their mood on the charts. So you start looking at the charts in 3D. So I'm seeing, okay, ADI's been on a move up. ADI's been on a long term. You see ADI's been strong on a daily. Euro's been strong, but we're starting to get them to pull down. This indicator, what we want to see is we want to see two pairs that start to cross. When they cross, that means that a reversal is pending in the market. These pairs, so we want to let's look at Euro. We see it happen with Euro and NZD. So NZD was the strongest, Euro was the weakest. So we look at Euro NZD, there was a retrace or there was a pull down. I'll show y'all, I can't make this up. Euro NZD. Y'all see the drop. So we were looking at this currency strength indicator. Find out right, okay. So this let us know on a 30-minute time frame that when they crossed, that would have been our entry point. And we would have caught, if they crossed probably right around here, we would have been up about 30 pips from watching the change in the strengths and weaknesses. And it's still dropping. It's pretty much one of my points here. Came to this level and bounced back down. So that would have been a nice retrace. That was a good question. So let me pull up. I'm gonna pull up something real quick. Here we go, right here. I'll drop this in the chat. So these are correlations, positive and correlation. So you get into a point where you recognize a status, and you know, if this is taking a little bit to get in, it's just practice. Some of my newer traders, you're gonna be hearing me talk about risk on, risk off. This is actual trading. It's a little deeper than retail, but when investors are feeling optimistic, they go to what we call risk on. So risk on, Euro, GBP, ADI, CAD, and NZD is going to go up. When we have risk off, JPY, USD, CHF, and Singapore is going to be going up. Also USD, because USD is a world reserve currency. So let's say something happens, like we have the coronavirus, we have some big news, or, you know, it's steady spreading. Here lately, investors have been shrugging it off, but if they get leery, if something happens, there's you know, an increase in a trade war with China and US, China and Australia. Well, investors are going to be leery, and they're going to be moving their money over from the stock market, Euro, GBP, ADI, they're going to find it to something that's safer, like USD JPY. That's where we can kind of find the reversals, and we'll know, okay, if we see that there's risk off in the market, we know that we're going to be wanting to buy anything with USD in the front, and we're going to want to sell anything with JPY. We want to sell all JPYs. On the opposite, if there's a risk off, we're going to be looking to sell the GBPs, Euros, Audis, CADs. Currently, looking at the charts, we know that there's been risk on. Everything's been going up. Everybody's been putting their money to work. It's been risk on. We're getting to a point, though, where it looks like the risk can come off the table. Investors are going to put their money back in what they call it's going to be on I don't want to top the tip of my tongue, but it's basically where they don't have their money working. They're sitting in cash. It's called in cash. So they'll have their money just in cash. They won't be putting it to work. And then you'll notice the market start to drop. So I don't want to go too in depth or too advanced with currency strength, but I did want to give Winston an understanding of how I know which pairs are going to do what. You can use, drop this in the chat now. It's going to give you guys an introduction into risk on, risk off. And then even simpler than this is just a guideline, but you can also use this. Where is it? You can use this website. There's a tool for correlations. So I'll give you a quick example of this. So like Audi CAD and Audi NZD, we want to see how correlated they are. Correlation just means they're going to go the same way. So we use this tool. Shows me the daily, 4 hour, hourly, 5 minute, how much they're going to be correlated. So Audi JPY is going to be 92% correlated together. So they're going to move pretty much in the same direction. If I notice they both have Audi in the actual base. And if you guys look at the thing I just sent, JPY and CAD, they correlate with risk, or excuse me, they correlate actual correlation. So it's going to be Audi and JPY. Excuse me, Audi is the one that's the front runner here. But with this tool, you do know that Audi and CAD, they're going to move in the same direction on the daily, the 4 hour. Pretty much all the way through. Excuse me, they kind of changed their diagram. It used to be a little different here, but there we go. We can click through it. So on the daily, they're going to be 92% correlated. On the 4 hour, right now it's only 16. The 1 hour is 80% correlated. So when I'm looking at the 1 hour chart, we'll see Audi JPY, got a nice bull move up. We look at Audi CAD, look pretty much the same, a nice bull move up. So I'm pretty sure everybody would agree if we're looking at charts, no matter the chart pattern, if we see that we know that Audi JPY and Audi CAD go the same way, I wouldn't want to buy one and sell the other. I mean, that's kind of common sense. We're going to want to go the same exact way. But what this does is when we start breaking them down, I know that Audi is going to be let's look at the sheet. Know that Adi is risk on. Know the JPY is going to be risk off. So I really don't want to leave you guys in suspense. So I'm gonna go ahead and show you what type of work I was speaking about. So now I know that Adi's the strongest. I know JPY is the weakest. Or excuse me, I know that USD is weak. I know that JPY is weak. Well, when I look at this actual chart, CAD and Adi are both risk on. So if I go back to Adi CAD is going up. If you look at our diagram, that means that Adi is going to be stronger, CAD is going to be weaker. So now I can put CAD on this list. And we'll probably the next session I'll show you guys how to make this list, and then I'm gonna show you guys how to pair them up to make trading decisions of which pair is going to be moving and which one you want to actually enter into. So Adi CAD's going up, so Adi has to be stronger than CAD. I know that Adi's stronger than CAD, USD, JPY. So I want to make a difference. I want to see is, let's look at, we got CAD, JPY here. I'm trying to figure out if CAD is going to be actually stronger than USD and JPY. Come back in here and I'm going to look at CAD, JPY. And I'm usually doing this a lot quicker, but so on an hour time frame, CAD has been stronger than JPY. Let's look at USD CAD. And since USD is dropping, look at our diagram again. USD is in the front, but USD's price is falling. So CAD, USD is the weak one, CAD's strong. So this is correct. We got Adi strongest, but it's not stronger than CAD because Adi CAD is going up. We do see CAD is stronger than USD, JPY. Now I'm gonna come here, I'm gonna look at GBP Adi. I wanna see is GBP. Adi is definitely stronger than GBP. Now we want to check to see if GBP is going to be stronger than the rest of the pairs. Stronger than JPY. Stronger than USD. Now, is it stronger than CAD? Yeah, that's pretty much stronger than CAD as well. Now we're gonna look at this kind of like a race. Who's in first place? Who's the slowest? Who's taking off? So the only other thing we got is NZD. And from knowing Adi NZD, I can go to tell you NZD is probably gonna be stronger than most of these. So we got a list of strongest to weakest. And we'll just double check to see Adi NZD, which one's stronger. Adi stronger than NZD. NZD CAD. NZD stronger than CAD. So yeah, we're good. Now we got a list to work with. So currently right now, this is how, if they were in a race, there was horses. Adi's the strongest, NZD, then we got CAD. We got GBP, USD, and JPY. So now we can make a trade decision off of this. we want to check our levels. So I already know NZD is stronger than GBP. So if I'm trying to trade GBP NZD, at this time, I'm not going to be looking for buys right now. Now, these can change, but it's giving me a scope of what's going on in the market. We already looked at the beginning of the call technically that we may see a rollover. We may see the price starting to reverse. We're at the zone. But what I'm gauging from this is what we call optimum pairing. So I don't want to take the strongest, the one that's just running hard. I don't want to take the weakest. I want two in the middle. I kind of want to look at maybe, let's say CAD USD. Or USD CAD, excuse me. So Danny, now I'm gonna do my regular markup. I found out which pair by strongest and the weakest. You see it has me at a zone. So this puts me, when you get efficient at this always puts you in a good place to find an entry, whether it's gonna be continuation, reversal, whatever it's gonna be, it's gonna put you in a good area to get ready to take a trade. Earlier, we seen Adi, and I see that at this time, price may flip over. So I'm not just gonna go short, but I am in a good place in the market to make a decision. Do I wanna go long or do I wanna go short? Well, to figure that out, I wanna do my chart work. Price came up, came back, it's holding this zone here. On these smaller time frames, I had a nice range here, broke out of the range. It's giving me more context clues. We was in an uptrend. We're in a strong uptrend. We were ranging for a couple of days. We finally broke the range to a new zone. We're coming back to test this. So that lets me know, okay, CAD was strong, but it's probably just a retrace. It's pulling down. Got all this uptrend. Retracing, we're starting to get a wick. So this trade may be almost about ready. Nice wick here. Nice wick here. We are pulling down. We're at the bottom of the Bollinger Band. We're on a 30-minute time frame. Wicking out, wicking. So now I want to ask myself, how much do I risk? Go back to my trading plan. How do I get in? How much do I want to risk? I already know how I got in. I got in with currency strength. Is what sent me to USD CAD. Now I want to know, how much do I risk? Okay, let's find a zone. Okay, if price comes down to here, really if price breaks here, or even this wick here, zoom in. How about this wick here? What is that? 30. Actually, let's do the round number. So I'll start off with this daily. That's about 100 pip risk. But we can use smaller time frames to get us a closer level. But I know if I break this area, price is going to probably continue down. So that's going to be my end game. End of all stop right here. Now I want to see if I can find something smaller. This is comfortable. This gives the trade room to work through the range. It can even come back down, test, form maybe a double bottom, and then give me a nice impulse up. So that's why I'm putting such a big wide stop. A lot of times we get caught, we try to use tight stops, and the market does something just like this, like it broke down. So you were thinking, you know, maybe I want to enter off this pullback. I see the trend's up. I want to enter the pullback, but I'm trying to get a tight stop. And what does the market does? It runs that, and then it shoots up in your direction. So you want to give your trades kind of like an end all, a bigger room to work. Yet, I can have this area here identified. So I'm like, hey, if it breaks down here, it could go ahead and just drop. You know what I mean? This is kind of like a decision point. So if I was to get in this trade, say I was just to be aggressive and just say, hey, I just want to buy it. Then I know at this area, this is where I want to start making up my mind. This is about what? 50 odd pips. So I lied. This is more about 120 pips. About 50 pips here, 50, 60 pips. If it comes out down, I want to make a decision. Do I want to lighten my load? If I have let's say a 0.10, do I want to cut some of this trade to a 0.5 and just let it see what it's going to do? Is it going to bounce here? So I'm making informed decisions. A lot of people will tell you guys things like, oh, just buy, just wait for the trend line break and then sell. But then the price does something crazy, like it comes. These price charts are really random. Say it did break let's say just for example, say it did this. You waited on your perfect setup, bounce, got the retrace, but say price came down, then it started doing this, it started whipsawing. You're just going in and out of profit, in and out of profit. Then let's even throw a kicker. Let's say it break down a little bit more. You're like, oh, I'm good. I'm in a good sell. Yet price does that. Hits your stop and take you out. So it's more about, I'm adding in different elements. It's more about learning how to manage the trade. So we're still looking long. We're looking for a buy. But I was giving you guys a sell example of how to manage the trade. A lot of times they make it seem like it's a science more than an art. Like it's just 1, 2, it has after it breaks the trend line and reaches, it has to drop. Now price can do something like this, like bounce. Go wherever it want to go. So you got to plan accordingly for that. So back to my reference, I'm looking to try to get into this to see potentially. My bias is long, even though it's going against me. I'm not in the trade. Somebody's making money on a sell. But based on what I've seen, I'm at a good point. So I want to see how price is going to react. We have a 50-day EMA. We have a zone here. Is price going to break this zone? Well, if it breaks the zone, that's going to change my perspective. It's going to let me know USD is going to stay weak. CAD is going to stay strong. Now I'm going to be looking for a sell because it broke my 50. So I'll be looking more for a sell, which it looks like it's giving a big, nice candle. Could go ahead and give us a sell. We can either play it. Write this down. There's different methods of getting into the trade. You have a breakout trade, and then you have a pullback trade. Either one of these are right. I prefer pullbacks. I like to let price come back to me. I want to buy. If I'm selling, I want to sell at a higher price to get more for my money. If I'm buying, I want to buy at a lower price. Why do I want to buy while it's already expensive? Or why do I want to sell while it's already cheap? So that's why I prefer pullbacks compared to breakouts, because a price could break out. Say I was to enter here, as soon as it broke, it could break out, come down, retest, but just keep shooting up. So you mapping out. When I first started kind of going through this, you want to map out different scenarios for your trading decisions. So UCAD, currency strength sent us to UCAD. We have a nice zone. It kind of testing this zone, but it hasn't broken yet. Now we want to zoom in and see what's happening right now in current time, current price action. Nice engulfing, filling this wick, but we notice it hasn't broke this zone yet. I want to see this zone broke, this previous wick, before I jump in this trade. Nice candle. Switch it to a new zone. So honestly, UCAD sent us here, and we could have took a nice breakout trade and caught a few pips. What was that? Probably about 12, 15 pips. So it really wasn't that much, but hey, if people like to scalp, that would have been nice scalp. And currency strength sent us here. But you notice that, like I said, the market sentiment is changing. USD is about to probably go strong. So we see all this is retracing. So you would have had to been quick on the gun to get in and out of this. So just to double check my work as far as an entry, let's look at the indicator. It's gonna make it simple. USD still weak. CAD's actually pretty weak as well. So we're gonna get some choppiness before we move to the next status. This price probably gonna chop around a little bit. Well, actually, it's been kind of chopping around. So we got our first pull out, our first impulsive move. So if price comes here, pulls back and give us a wick off of this VWAP, I'm gonna be looking to sell this for right now. But I'm keeping in mind that I think the overall sentiment is gonna change. So once again, I'm staying on my toes. I'm not just being, this is called not holding a bias. I want to make money. I don't care about being right. If I was wrong, I was wrong. The goal is to make money. So currently my bias for the long is still playing out. I haven't hit the stop losses yet. I got a big candle down, but it's pulling up. So I'm just looking for a reason to get in the market. I have where I'm going to be wrong at. 2 areas already identified. I want to see where can I take my profit at. Well, for that, I'm looking for these little areas where price came up, broke down, resistance zones. Good one for me is going to be right above this area here. My first target. It's right about 103 pips. So right now, that's a 1-to-1 for my first target. I don't trade 1-to-1s. I want to see 3 times of what I'm putting on the table. If I'm risking 100 pips, I want to see the potential to go 300 pips. So my next zone is going to be somewhere around here. To identify zones, just look up support and resistance. You see it played as a ceiling, came back up, played as a ceiling, then it broke this level, came back up, and it was kind of like a ceiling instead of the floor. So that's another good area. From where we're at, it's almost a 300 pips. So I'm willing to take this trade and try to see if we can get this to come back up. I'm also seeing if I break down in the structure, the potential for a W, the potential for 2 different patterns that could brew. We can see kind of opposite looking W. We also can see there's a potential for a head and shoulders to the downside. So currently USD CAD is indecisive. It's probably not going to give me an entry. If I'm looking at current price action. So that's typical for now. It's Tokyo, so around London or New York. this will be more of a pair. Now it's on my radar. I'm looking more long, so I'm not going to enter. I'm just going to go ahead and put some alerts. Put an alert here. And I want to put an alert somewhere around here. So break up, give it a little room. So just looking at AUD USD, coming from AUD USD, I was able to identify US CAD is basically in an area of where I may want to get ready to take a trade at. It's did its pullback. The trend's been up. It's pulled back. We're at a zone here. Now we're just waiting for the banks in that actual area to open up to give us enough momentum to push it up, or if it's going to push down. So this is analysis. This is full analysis. There's no entry to just jump in the trade. I'm going to stay patient and wait for it to. I don't want these little bitty moves. I want to see the big breakouts. And I want to be in before or right when the price is going to get ready to take off. So this is something I'll mark off and I'll just wait. So there it is. But from this homework, I have all my buys done. So tonight when London open, I know it's UCAD. I want to be looking for buys. I don't want to look for sales. Reason being is because I've been seeing CAD's been strong all day. These don't just stay the same. USD's been weaker. So I'm looking for USD to come and take more strength than CAD. I also looked at the chart patterns, and it's showing me that overall, the last few days, USD's been stronger. USD starting to make a move up. We just got a little bit of a retrace. We may be clear to enter this because you see the nice big wicks coming in. I have my stop set, my target set. So now I'm going to do the calculations. Last thing here is the calculations on how much do I risk. I'm only risking 3%. So I take my total capital. I want to say if I'm using a 0.02, I know that realistically I could risk up to 100 pips. So that's $20. Okay, is that $20 going to be, say I got a $200 account. Well, that $20 is going to be 10% of my account. That's where you get into trouble. So I may not want to take that trade. I'm probably going to want to either lower the lot size. One penny lot would be 5% of that too. So that's okay. Me, because I'm trading higher, usually I use a bigger account. I want to use 3%, but 5% is okay as well. You can get a lot of trades for your money and learn these markets with that. So we got a nice wick here, respecting this zone. We could have got in a while ago on that big candle. Could have caught 2 trades already. A scalp, and then this other trade would have been more of an intraday or a long term, kind of holding this to see if it's going to go ahead and go higher. One last time, we'll look at the strength meters. If you notice on the 15, they're already kind of crossing. But if we look at like the 30 minutes, the hour, USD's been weak, but CAD's starting to get weaker. USD's starting to get stronger. Once they meet in the middle and cross, that's going to mean USD CAD will be on an upswing. It's going to start uptrending. Also starting to get an engulfing to the upside. So there's probably a breakup, retest, and then that'll be our entry for the long trade. So my bias didn't change, but I am keeping an account that the market can do whatever it wants. I don't control the markets. The indicators don't control the markets. I'm just flowing with them. So we touched a lot of topics today. A lot of this is we're gonna keep on covering different things and break it down kind of piece by piece. But it went from, I wanted to hit correlations and currency strengths, and we kind of went through the whole shebang of using currency strengths to find a place in the market, find zones in the market, identify different pairs. Therefore and so on. We went over confluences, multiple reasons to get in the trade. So it may be a lot, but it does get a lot quicker for you guys, especially with having a trading plan. You can kind of roll through this pretty quick. Typically, because I know which pairs correlate. I know currency strength a little bit. I could probably mark up the whole Forex market in about an hour and a half, and I'm playing through the risk on and risk off. So I see AUD go strong, I'm not going to want to buy USD. Just that simple. So AUD USD is going up, USD CAD is probably going to sell. AUD USD is going up, Euro USD is probably going to be going up. AUD USD is going up, AUD JPY is probably going to be going up. Potentially, not probably, potentially it's going to be going up. Like we look at this here, one more time. I don't have to say potentially, we're looking at probabilities. 80% of the time, if AU is going up, AUD/JPY will be going up. And then you start learning how to break them down. So not looking at so you're looking at more of AUD to make determinants across the whole board. So this was we got a little bit more advanced. We started off on a base level. And we're going to definitely keep hitting this out, because I'm telling you guys, once y'all get this portion of it down, you're not really even going to have to use technicals like that. You're going to be like, okay, I see this is going up. I see this is going down. Bam, here go my spot for the entry. Let me take the trade. And then you're also going to be in multiple pairs at the same time from looking at one currency pair. So I hope y'all got some value out of this. I'll put the recording in the group. All right, let me ask you this. Let me see, before we get off, any questions on some of the stuff we went over today? Maybe we can touch some of the bases on. So today we went over, we're stepping away from being retail traders and just looking at pairs. And we're learning about currency strength, breaking it, and we're actually becoming traders. We're learning about principles that's going to allow you to trade any chart, any asset. As I was saying, you see the stock market you look in the chat, you'll see that the stock market correlates with this as well. So you'll start being able to even trade stocks off of seeing what the money flow is doing. You'll see, hey, ain't no money right now in USD and JPY. It has to be bullish to stock market. Let me go look at Amazon. Amazon's a high tech stock. Amazon should be going bullish. USD is going real weak. Let me go over here and I can catch some options, even an options play in stock market and make money from anything from stocks to corn to commodities. So the umbrella gets big. It does take a little bit of work, but I got faith you guys keep showing up. We'll get it done, and we'll come from having to feel like we always have to be right. That's one main thing before we go I want to highlight too. It's more of, I said, the 1-2 step. It's not about always having the exact perfect entry. It's more about how you're risking, what you're doing when the trade's going against you, what you're doing when the trade's going for you. It's always 90%, trading's always 90% mental, 10% technicals, and 10% fundamentals. So open the floor. Any questions, any concerns, comments? I'll catch you guys tomorrow. We'll do another session at the same time. It's been your not so everyday trader, and You guys take care. Let's kill the rest of the market. This is going to be about Wednesday, so we should have some midweek reversals coming up. Peace and blessings.